Welcome to Trading Lounge and the US indices for Thursday, September the 22nd. And just starting with the S&P on the daily chart here. As you know, we're looking for from the top up here, up yonder, we're looking down as the A wave, the B wave, and the C wave to move down here. So we're looking for 5 waves in this move through here. So we could look at it as wave 1, 2, and 3, and 4, and 5 here, but that would just be a little bit too short here compared to this move here. So having this as 1, 2, 3, 4, 5 just for wave 1 here, and then coming back for wave 2, and then wave 3 coming down, then that would be a little bit more in perspective and proportion and those sorts of things. Is that going to be true? Well, I don't know. I mean, we just got to kind of keep doing the best we can and just be, try to be aware of well, everything we possibly can, really. But that's what I'm thinking anyway, do you know what I mean? And we can adjust it as we go. So I don't think we need to get all sort of heebie-jeebie about, the exact price point that it can go to. And, we may just have 1, 2, 3, 4, 5 and be finished here, But it's not what I'm seeing with the banks, So the banks have been a bit of a guiding light for me in this whole bear market right from the get-go, as you may recall if you've been there with that. So but anyway, so let's just sort of go in and see how we can count this. But we come in, we're on track, we're coming down further. So I'll just go to the 1000 ticks here, and this is where we were yesterday. So I just want to get in a bit more data for this. So this was one way that we're looking at this in a couple of different ways. So I think that's kind of okay and a bit sort of healthy. So because of the the current situation, then of the rates, we knew that it would be a prickly, spikely affair, and that's sort of playing out okay there. But it was pretty mild, really. It wasn't anything that wasn't really expected. They'd put it up 75 basis points before, and twice before, and now the third time. But anyway, for us, we're in this wave structure coming down here now, and it would be likely that we would breach this trend line down here as well. That's what a third wave does. It takes out those. So just to have this trend channel here is quite good, because we'd want that third wave here to breach that trend line. That would tell us that we're in the third of the third. Now there's different ways to count all of this structure here with this. So if you've got a different count, that doesn't matter too much, because it wasn't easy when this when the Fed spoke over here, but yeah, and there's different stocks doing different things as well. So I try to go with the consensus of things, but we've got 2 consensus of ways to count this to the downside. The other way to look at this here is it won't matter that much. I mean, what's going to happen here is we're going to come down here a bit, and then we're at the 8 here, so we're going to come back and check on that, and then we're going to hit supply coming back in here somewhere, all of these lows here, or the 61.8%, whichever way you want to look at things. But that's kind of where it's at that point. But this whole move down here can be counted differently as well. So looking at it on the 100 tick chart, and I'll just get in some more data here. Is that enough? Okay, so this is another way to look at it. So there's, I wouldn't get sort of caught up on what's right or wrong at this point. The game in town is to understand that we're in a bear market, and how to make money out of that. But of course, it's always nice to be right without in a humble way. But 1 and 2 and 3 and 4 and 5 for 1 here, and then an ABC for wave 2 here for this wave 2. So that's all suitable as well. And then down for one here. And then an A, B, C for the A wave. And then, because this makes a nice B wave here, rather than putting this here as around the other way, putting it a B wave here, which would make that a C wave coming down in the bigger picture. So like looking at all of this as like an A wave here, I can understand. And then having this as a B wave over here, so an A, B and C wave here, that would be the other logical way. But it just didn't give me 5 waves in this sort of structure here to view it like that. So it's better as an ABC here. But like I said, it doesn't matter too much. It will come out in the wash a little bit later on when we get down here further. We'll go, oh, okay, that's the only way it's going to fit is by putting this here. Pete, you made a mistake over here again, you know, so that type of thing. So it doesn't really matter how we sort of, I mean, it does, you know, look, like I said, it's nice to be right, but it's not really going to affect anything at the moment in what we're doing. So yeah, so I think we'll just keep the 2 counts going for a little bit. I think that's kind of, well, and you know, if all I can say is I don't know which one is correct, and I'm going to keep the 2 of them there until I do know what's correct, you know, so something like that. So this move down through here, I'm thinking we've got 1 and 2 here, and then 1 and 2 here, and this will be all of this. I think this is not finished yet. I think there's some sort of, it might be like that. At worst, there could be 2 little humps here to get to the low. It doesn't really matter, but what we're looking for here at the end of the day is we're looking for this, because there's a beginning, you know, there's a beginning, the building process, and there's the middle, and then there's the ending process, right? So we're in the kind of ending process. Do we have 1 little hump or 2 little humps? You know, what type of camel do we have here? So, but at the end of the day, what we're looking for is we're looking for the market to move up in an A wave, a B wave, and a C wave. And will it reach the 61.8%? But you'll measure that once you get there, you know what I mean? But all I can say is that 2 things really is that we'll be looking for that ABC pattern. It may or may not come back to the 50-60%. It may just come back to the 40%. So you might need to drop that down in here in that regard. But it would be nice to put a little position in there. And then the safe trade is under the B wave here, wherever that B wave is. Okay, so you don't have to worry too much about this. Just let it finish or drift in the Asian session, and then there should be some sort of corrective rally, maybe when Europe opens up or something like that. Yeah, so we should see this move on down at that point. Now, the other thing that I wanted to say as well, if I or we can just do it with this chart here, doesn't matter. So if we've got wave 2 here, for example, you know, and then we've got wave 1 and 2, and then we've got 1 and 2, and then we've got 1 and 2, well, we could be moving down here pretty quickly, isn't it? So I know Monday holds the records for bull days, but you know, I've seen it Mondays get smashed as well in the bear market side of things. The 1987 crash brings back memories of shorting the S&P. So on the Friday and through the Monday. So yeah, that was a hairy ride. But the thing is that if that's correct, then that's going to come down pretty quickly through here, I would imagine. So you know, yeah, it's just a bit of food for thought. I mean, I've been building in the banks on the downside, you know, so I'm going to keep building into those over the next couple of days and see how that goes. So I've just got a bit of leverage with CFDs on that side of the fence on that trade. But yeah, just you know, it's good. You know, of course we can be wrong, but if we've got wave 2 here and 2 here and 2 here, and also 2, this could be wave 2 over here, but we're still going through these series of 2s, you know, even once, the other point too is once once this starts coming down, so there'll also be another opportunity here as well. So let's just remove this for a moment. The straight lines annoy me. So, you know, wherever that top is up here, what will happen, and wherever that low is down here, let's just say the low is here, right? So from that top, this move that comes down will likely be 5 waves to wherever that low is there, and then there's going to be another little ABC pattern here. But this one here, probably because it's the third of the third of the third. I mean, really, these haven't pulled back up 61.8%, has it? I mean, the Fedi situation was slightly different, but even if that was wave 2 over here, it hasn't pulled back to that 50-60%. So as we start to get into the third of the third of the third in here, it's going to be less and less and less, you know, coming to the upside. So that's what you've also got to sort of understand. It. Don't be looking for the 61.8%, but accommodate that in everything, and also look to try, just keep kind of building in small positions. And then we've got group 2 here. I know this is a CFD contract. These are CFDs here, so it can be different price from the E-minis, but we're still within group 2 here, 65, 72 and 80. So you need to be, you know, once you get a few positions up here, and you know, if they're small enough and you can survive the rallies, the idea would just be keep building in through here, you know, and keep it going, you know, and there'll be a bounce off the 35. That's another serious level here, number 5 being the second strongest number. So you can expect a bounce there, but you might be able to short the bounce because you're going to get a pattern like this here at 35. It's going to come down, bounce off it, you can short it, come down, come back, short it again, and then use the lows here to keep adding to the shorts, you know. So there's that way of moving through all of that as well. But if you don't overtrade, you can survive. Yeah, I mean, I'm not perfect myself. I've got my own, you know, we all carry our own crosses for everything. So, you know, but yeah, there could be a nice opportunity here. Okay, I won't waffle on anymore, but we've just got to be prepared for it. Yeah, but don't overtrade, just in case I've got it wrong. I mean, maybe this is some sort of 5th wave low here and on the markets, and we go up from that point, you know. I mean, we see a lot of reversals around the Fed's comments, you know, but we'll see. So be safe. So the Nasdaq here, I can look at it as wave 1 and 2 here, and then wave 1 here, and a smaller A, B, and C over here for wave 2. Don't forget we've taken that top out here, but we haven't taken that top out. So the other thing is we could have wave 1 all the way down here, and then an A, B, C here for wave 2. So we've got one of these 2s here for this, you know. I wouldn't get too hung up on it at the moment. I will sort of tune into the because I like to sort of line, you know, this up with tech stocks and the S&P up with the banks and so on to a point. But the same thing applies here. We're going to be coming down. The 11,500 is a medium level. It's important, and it will be you'll see it play out, and then above that is group 2, and then we've got group 1 again. So group 1 will be the 300, the 200, and the 100. 1, 2, and 3 is always group 1. It could be minor group 1 or subgroup 1 or micro group 1, but that will be this will be the swing range here for the 11,500. 12,000 is important and 11,000 is important, but this here will be more important. Normally that is the case, but because we're also in wave 3 of 3 of 3 of 3 of 3, we might just slice right through all of this like a hot knife in butter, you know. That could be the case. That's what we're sort of playing for. Will we get it? I don't know. Sometimes we do, sometimes we don't, you know, sometimes, but you have to be, you know, preparation and opportunity meeting is kind of what we're looking for. So we're prepping for it, you know, we'll prep for a nice meal and we'll see how that pans out. But the thing here now too to understand, all of this support here will now be checked for resistance. You know, it hasn't checked it yet because it made that new high here because of the Feds. But now when this bounces off here, it'll be coming back to check all that supply there and then be pushed down. But even when it's in this area here, that first little high up here, that, you know, you can bring your stops down to that point above that high. But at the moment, you need to keep them out of the way here, you know. Yeah. And once again, just keep adding. You know, if you look from 12,000 to 11,000 and split it up to every 100 points and put one contract at each, then that's pretty safe, you know. It's manageable at that point. Alrighty. Same with the Russell as well. We can look at the Russell as 1 here and 2 here in blue, and then 5 waves down for green wave 1 and green wave 2 here. We didn't make a new high here, so we can look at that as wave 1 and ABC for wave 2 here. So this offers a slightly different count at this point. So we'll also be looking for wave 1 and 2 here. We can see that group 2 here is, because when we're talking about the 800 here, we're looking at group 1 above and group 2 below. So group 1 over here end up locking in over here, and this came back up checking that supply all the time. And, you know, pinned it down, and now the support over here has been, you know, also group 2 here right onto the 65 has all been such a nice support, but now that support's gone. So that means we're leaving the 800 now because it took out the support here. But that said, you know, it will, when this leg down here, wherever it finishes here, it doesn't really matter too much, it will go back and check group 2 here and all this support, this supply here, you know, and then be forced down again at that point. So you want to be shorting, well, there's a couple of things you could do here. It doesn't really matter what you do as long as you know what you're doing, as I say, but basically we should see some sort of little, I'm probably making that too big than it really needs to be, you know, but you can short it under this one here. You can look for the anywhere, this group 2 here, right, that group 2, I'll just take it down a tad, anywhere in there will be fine for adding, you know, a small position. So you don't have to overdo it, you know. Yeah, that's all good. I mean, this number, you know, 1 is the strongest number, then 5, then 8. And you can see that this has just come down here, bounced off here, come through, checking it, and then failing at this point. You know, it's very, it's not always a pretty picture, but that's the picture, you know. And once you get that into your mind at any price point, then you're on your way, you know. Then you understand the market's a little bit better at that point, you know. So the trading levels are not perfect or anything like that, but what they do is they bring your attention to the price over here much more than you would normally think about that, you know, and how to interact with it at that price is important, you know. The Dow, so yeah, what have I got here? Okay, I got it pretty straightforward. I've got it down as 1 and 2 and 3, 4, 5 here. Bit of an overlap here on that, so it's probably, you know, be poo-hooed on that one, but the ABC for 2, down for 1, the A, the B, because I like this as a B wave. Like I said, it put a bigger B wave over here, and, you know, have this as an A and a B and a C up here. It just doesn't fit properly, you know. Anyway, not here nor there, but so yeah, I mean, I think that's okay like that, actually. I like that. This is also in line with the banks, by the way. So anyway, once again, we're at 30,000. So we're going to see a bounce off the 30,000. It's going to go back somewhere here, and this low on the B wave is going to be important, this one here, so somewhere in amongst there that's going to kick back into that point. So you could get a small position there, you could add another small position down, so get 2 positions in this area here. When this becomes the first low below the level, look to get another position there, and kind of build in a little bit. I mean, to get a few positions, when you got a level like this here, if you can get a few positions in here, anywhere from 2 to 4 positions in here at different prices, then once it becomes locked under here, like, you're safe at that point, and then you can sort of take on a little bit more risk in adding more positions under here because you've got some pocket money already locked away there. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.